Tushar Pradhan, CIO of HSBC Global Asset Management, is with us now. Tushar, hi, good morning. Thanks a lot for joining us. I think we're talking to you first time this year, so let me wish you a happy new year to you and your team. Your thoughts on what 2019 has in store? 2018 was a year of mean reversion.
Well, Tushar, we are not able to hear you. We'll have to readjust the audio. We'll get back to Tushar Pradhan in just a minute. Just a word more on how the markets are doing. Actually, they're putting on weight with each passing moment, about 45 to 50 points higher on the Sensex and the Nifty. And as we've been pointing out, it's the financials that are doing reasonably well. A lot of the PSU banks and NBFCs are leading the pack. At the moment, the private banks are not participating so much. ICICI, for one, has been on the back foot for a better part. So the Nifty Bank is not participating, but the broad brush of financials, mid-caps and NBFCs doing reasonably well. But yeah, you were speaking about metals. The recovery trade in Asia is
It's taking generally all the metals higher as well, and they've had a couple of rough days. So both on the ferrous side and the non-ferrous side, whether you're looking at a Tata Steel or a JSW or even a stock like Hindalco for that matter. So it's a reversal day for a lot of these stocks.
I think GSPL is the one which has the highest amount of shorts. If you see the move yesterday, that was the one where you had the highest short position. So obviously by same logic, you'll have the biggest rally in the ones where you have the highest amount of shorts. So that's one which is opening higher. So things looking good over there. Metals in general doing well. But we have, I think,
yeah, we've got Tushar back.
Tushar, I was asking you about your outlook for this year.
Yeah, so I think what was happening in 2017 calendar was something across all asset classes that everyone made money. 2018 we thought that it is going to be a lot more tempered than 2017, but 2018 was extremely surprising. It began with the clouds of the trade war, and then eventually the oil prices shooting up to a level where all of the emerging markets, including India, really took a beating. So I think 2018 was a little bit of a surprise from an asset performance perspective. But as we look at 2019, I think a big picture emerging obviously is that there is a clear preference from a valuation perspective, from a growth perspective, to emerging markets rather than developed markets, because what we were arguing about this sugar high that the earnings upgrade in the US was caused by these tax benefits that the corporations in the US got, I think that effect is going to start to taper off. Interest rates have inched up in the US. All eyes are on the Fed, and growth is also slowing down. So all of that leads to a pretty significantly interesting picture. And I think 2019 for emerging markets, and I think within that India, given its earnings growth potential, should be a pretty bright spot.
Okay, that's good to hear, Tushar, especially as we ring in the new year. A very happy new year to you. Where would the gains come from? In December, everybody was betting on capital goods. Is that really that good? Yesterday, we had the CMI breaking the idea that CapEx has taken off big time. Would it be CapEx cycle driven?
I think most of the economic cycles do start with a significant CapEx drive, and I think this economy is no different. However, I think India is really moving on in terms of incorporating a lot of services inside of its economy. So I would not really think that that's the only leg that this rally can come through. I think we have a very significant NBFC sector. I think it has taken a bit of a hit last year for various reasons. But I think that continues to remain a very strong leg in terms of how our economy shapes in the future. It's all about capital, and I think these companies are making capital accessible to very large parts of the economy. And I think growth there should give you a lead indicator of what's really happening on the ground. So I think services I would include. I think manufacturing will be an outcome of the capex drive itself, and generally the demand situation in India, largely driven by consumption, will continue to lead the other leg of. So I would say that these three legs would form part of an economic upturn for India going up from here.
Tushar, where does this leave the auto sector right now? Here prices have come down quite a bit because of disappointment since Diwali in sales. Is this a good time to be then buying auto stocks? Are you expecting a quick revival?
Well, that's a difficult question to answer because what we've seen in the past 2 years, especially in passenger vehicles, has been a very strong momentum, which obviously as the whole cycles go will kind of taper off for a little bit. Now, what will take it to go to the next level of growth? That's when you have to step back a little bit and say, well, what is auto all about? It's about consumer discretionary consumption. And I think that's something which is a very, very strong vector for the Indian economy in the future. So while these cyclical moves in terms of stock prices and even earnings to a certain extent will continue to be a problem in the short term, I think one has to realize that the sheer penetration level and the demand that exists in this country far exceeds whatever we have today on the table. So I would not be hasty to say that, look, auto's done, or, that's going to go in for a little bit of a downturn. I think these cyclical moves will continue to remain, and I think as we even end the financial year into March, I think you will start to see some very significant volumes coming through the auto companies. So I'm pretty positive on that as well.
Pretty positive on auto companies. By the way, Hindustan Unilever, once again making a move to the high point. It's been a dream run for Lever, Tushar, and of course it's taken the entire sector along with it. Your thoughts on whether it's a space that you still want to buy? It's created so much wealth over the last 4 years.
Without doubt, and I think this continues to be the biggest conundrum, I would think, from a value investor's perspective. When you look for relative value, I think there is not much there. It's just the sheer attractiveness of the consumption that drives our economy, and within that, where HLL, or even for that matter, all of the other FMCG players actually stand. You have to realize that, and that is what exactly I was talking to you a little bit about, is that the given demographics of India are so strong that no matter what you try to price it at, I think rational valuations is not something where you have to look at. I think as long as you are convinced that the consumption dream continues, you have to allow yourself to kind of ride this without sound financial value advice. And of course, it's at risk, because if it doesn't work, people will come to say and tell you that, look, it was already expensive, why did you buy it? But this has defied valuation logic for long enough, as you said, over 4 years. How long will that last? I don't know. But I still feel that consumption is the main driver here. And all of these are offshoots of that main vector that drives the Indian economy.
Will 2019 be the year of the return of mid-caps?
I think there's a very strong reason for that to happen, simply because, and I don't have any crystal ball to tell you why, but I can tell you that any market which has taken a 26% drop in a year prior to the current year, the mean reversion, the rule of mean reversion, which is so strong, will continue to remain in your favor. So I think there is reason to be optimistic. And surely just on that momentum metric, we should expect a pretty significant year for mid-caps this year, I believe.
I think that'll make people quite happy considering the disappointment of 2018, Tushar. Finally, we'll kickstart earnings season for the third quarter now. As usual, IT companies in focus. Is it a good idea to have an overweight on IT this year, or do you think at best it'll be a sort of a market perform sector?
Well, last year IT did extremely well, and as you know, there were a couple of tailwinds which caused that. One is, of course, the pretty positive demand picture which was presented early by the leaders. And secondly, the pretty sharp drop in the currency which buoyed the earnings to such a level that it was much more than anybody's expectation. So I think that tailwind is really not there with us, because the currency actually starting to reverse a little bit will cause some sort of headwind. And in terms of the demand, I think it continues to be pretty strong, but on the backdrop of the fact that if the US economy is not going to grow as much as what is expected, then I think the IT sector overall can come under some sort of pressure. But I think given the fact that where the valuations are, I think they're fairly valued. If the earnings continues to come in, then I think they will be in line with the market growth. So nothing wrong in that. But I'm sure there are pretty significant opportunities out there, as you mentioned earlier, in the mid and small cap space, which look a lot more attractive from valuation perspective. And there are some opportunities outside of it as well. So I wouldn't be extremely overweight. I think I would be slightly overweight to maybe market weight in IT.
Okay, Tushar, we leave it there today. Thanks a lot for joining us. Good talking to you. That's the view from Tushar Pradhan from HSBC Asset Management. The markets cooled off just a wee bit after opening higher. 50 points was the gain at top, 56 points. Now it's about 28 points. Though, of course, for a lot of individual stocks, gains are still intact, like Tata Motors. Power Finance is an interesting stock because, off late we've seen quite a bit of buying in both REC and PFC. I mean, stocks have bottomed out. But today, Power Finance is showing that classical sign of, open and low being the same. So there's a bit of a buying there. And of course, Lever is one stock where we've seen some buying. Eicher Motors, on the other hand, that initial uptick is being sold into now. It's been that kind of stock, of course, Eicher Motors. So looking a bit soft right now, but overall, Surabhi, still a decent start for the market, perhaps trapping yesterday's shorts.
The only question I have on my mind is Tata Motors, Anuj. More than a long trade, more often than not, people have made money when they go short on every bounce on this stock.
Yes.
Whether that's something that will play out again.
That point is well and truly taken, and I think that at some point will happen, Surabhi. But, this is about, just tactical play for the near term. Because, such a beaten down stock, and after a long time getting some positive news. So that's why, you're seeing, that stock do well.
Well, the Chinese aren't buying too many iPhones. Maybe they'll buy more Jaguars and Land Rovers. That's on a lighter note. Anyway, let's take this conversation forward with Bharat Junani of Sharekhan. He tracks Tata Motors, I believe. So let's quickly get his thoughts in. Bharat, this 20% plus growth on US numbers, JLR numbers, how do you read it? What is the trend line trajectory? And should we extrapolate this into 2019?
So good morning to the viewers. While the US sales, definitely the momentum has been strong. We have seen strong sales for the last 3 to 4 months in the US market. But to put things in perspective, I think the other markets sales will not be that great as the trend is. So basically we have seen Chinese market shrinking very sharply for JLR, and we expect that trend to continue. Even if we see the UK market because of the Brexit uncertainties, the PV sales have been subdued for the industry as well as for Tata Motors. So basically, if we see an overall perspective, if we combine the sales of all the markets, then the sales will continue to remain subdued.
Okay, so you're not putting any buy on Tata Motors simply because of the US JLR sales?
Yeah, so US is only 15 to 20% of the overall volumes for the JLR, but the other markets, the decline in the other markets is much severe.
Oh, right. Okay, Bharat, we'll leave it at that. Thank you very much for joining us with your quick take on Tata Motors. I think there's a little bit of giving back that has happened in other Asian markets as well. Okay, no, actually, Hong Kong is still 1.2% higher. But maybe the first wave of buying is seeing profit taking in India itself. Yeah. We've seen maybe all the indices lose a little bit. Yeah, but let's see. This is the first
because we had a gap up straight away. Everyone was pricing in at the start, perhaps a down move. Because we had a gap up, there's some, perhaps profit taking. But overall, as long as the lows are intact, I think there might be second wave of buying, which happens at some point.
Okay. Well, we have to take a break on that note, but we're going to discuss the December sales numbers of Escorts with Bharat Madan, the Group CFO, who's joining us in just a bit after this break.